Hey, how's it going there? It's Adam Winnig from Blue Edge Financial, and I've got something exciting for you. I'm actually going to introduce you to Yuuya Kato. He's a 10-time funded professional prop trader that's one of the best forex traders that I know. And he's actually going to be taking you inside of a live group coaching call that we did for our Funded Trader Fast Track program, where we help people become funded traders. And inside of this clip, he's going to be talking about something profound, something that he calls magnetic zones. These are zones that he draws first things first before he starts analyzing anything else on the chart. And these are zones where price is likely to suck up to or suck down to. And this is a little bit different than what you may have been taught about support and resistance zones, but this is really, really powerful. This is the key to understanding what's actually happening on higher time frames to give you an idea of where price is likely to head next to. If you are interested in joining our Funded Trader Fast Track program, you can see more info at fundedtraderfasttrack.com, and you may be able to join the waiting list there. We only open up a few times per year. But with that being said, I just wanted to give you some value in here and really enjoy what you're going to learn from Yuuya, because he is absolutely brilliant when it comes to forex trading. So go ahead, take a look and enjoy this clip. And also, if you're watching this, give us a 777 in the comments below. We'd love to hear from you, and we'd like to hear your top insight from this clip that you're going to view right now.
These are high probable setups and you're looking on a bigger time frame. But how I trade is I always look at the daily. The daily is like my preview of like what it's like the trailer to a movie, kind of just showing me like, okay, the market is going in what direction, you know? And like, obviously when you look at this right here, I just take this for as it is right here. And I just see it as a ranging market, which, you know, I'll be talking about in next week's seminar. But when I look at the daily, what I like to do first before anything is I like to mark up my charts with horizontal lines by first going to the line chart. The line chart usually, especially on the daily, it'll show where the candle closes, not where, you know, like the wicks are. It'll show where these candles are closing right here. And the reason why I like these candle closures is because wicks are usually manipulations or liquidity grabs that, you know, kind of like stop people out, retail traders out. And these are like the big money moves that are happening. So in a sense, the candle closures really tell you where the strong support and resistance are. I use these line charts as a guide and also a range to kind of see how big my range for the day is. So for example, I always go to the most current, you know, area where price is at. And then I look for these areas. And how I put my horizontal lines is by finding a support and a resistance and finding this area where I can place the horizontal line at. So to me right now, the most reasonable horizontal line would be right here because I have a touch here. This is technically touching here, you know, as well too. This candle is still in it. And then this area is being touched as well too. This area is also being touched. There's multiple touches in this area. And even this right here, if we go back to the candles, there's wicks that are touching that area. So if we go to the candle, we can kind of see this area is being touched a lot. It just shows us that it is a very significant area on the daily. So that's the reason why I place my horizontal line or my, you know, daily zones right here. And I call these zones magnetic areas because price will always want to draw to this area. And as traders, we have to react to what price is going to do at this area. So that's why I always put where, you know, one of my horizontal lines is where price is currently at. And then the next one will most likely be one under it. So looking for an area. So the most reasonable area might be this area right here, because we have a touch right here. And then technically these areas right here too. And possibly this area could be wicked right here on the candle. It came very close, you know, so we can kind of see that this area is another strong area. And then the last line that I always do every single day is I have one that's closest to where price is at currently, one right below it, and then I have to find like one, you know, above that area as well too. So most likely this next area would be right here because I have a touch right here, a support, a resistance, and like another support right here too. So what I'm trying to do is just find these horizontal lines give me a range where, you know, I can potentially trade this. It's not in the beginning when I taught the first group, I think there was a miscommunication in a sense where I had to wait for the breaks of all these zones to take a trade. But this is more for a guide, kind of to understand that, like, okay, if I get a reaction, you know, at this level right here, like a candle, I have about 151.20 to all the way to 150.76 to maybe short this. Or if I break this right here, I only have about a 20 pip, range to trade. And sometimes like 20 pip range is not big enough. So what I usually look for in these ranges is a 50 or more range. So this would definitely fit the criteria right here, 150, 120 to 150, 170 something. It's about it's a little maybe under 50 pips, but it's still big enough in that sense. But this range right here where we have 150, 145 to like 150, 120 is not big enough for me to want to like enter a trade. If I did enter a trade, I would have to know that it is a lot riskier because this is another daily magnetic zone that I might not find an optimal retracement and an entry to kind of enter the trade. So kind of just having that in mind. And this is the first thing that I always do when I first go on my charts. And I always delete my line charts every single day to kind of refresh my mind to see where price is currently at. And then I always go put my first line where price is currently at, one above it and one below it. There's no wrong and right areas to put it. This is all for personal like preference, and like in a way where, say like if a person puts it right here, like obviously like where is he putting it? It's still in the right area, somewhere along the like there's a resistance right here, there's resistance right here. But the reason why I put the lines where current price is because I am a day trader. I don't really need to look at these levels right now. Like if price wants to come to this level, I will put lines there later. But for me, I put these levels to kind of give me a gauge of like the daily range that I'm able to trade it at. So like these are daily closures right here. So what I kind of do is find these daily closure areas that has a support and a resistance and see if I can, be able to trade these areas right here. And some lines are closer than the others and some lines are bigger, so you don't really try to like put lines, just because, okay, I want to put this at 50 pips, so I'm going to make this 50 pips, put it at areas where it's closest to where your price is at. Like I could have easily just put it right here, and disregard this area. But at the same time, like if price does come to this area, like I'm going to be like, okay, I can sell this. But then if I never had a line right here, I would be like, oh, this is why it rejected and pushed back up. So I'm always putting my like daily zones at where, price is very, where current price is at. And if it happens to be 50 plus pips, that's even better. That gives me an opportunity to kind of enter trades off of that, but you don't have to force that to happen,
Okay. Where is your middle line? Where did that come from?
The middle line,
151.19.
yeah. So this current price is right here, right?
Yeah.
The only reasonable area that I could find would be, we have a resistance right here, the wicks right here. If you turn it, like it's just, I have been touching this, and then we have a support right here as well too on this area as well. And like you kind of can just, it's like you'll start to realize that like a lot of these areas, as long as we have a support and a resistance touching, I count that as a very magnetic zone. And I like to put that. And that was the only area that is nearest to where price is currently at. Maybe I could put one right here, right below it as well too. Like now looking back at it, like I can put one right at this level right here because, you can count this as a touch right here. And then we have a support and a resistance right here. So like,
so you want at least one of each, a support touch and a resistance touch.
Yes, that's ideal. And like sometimes you might not get it because of the fact that like the market is like trending really well, like this, and like you might not get it. And it's just like that's why I was saying there's really no right and wrong, because at the end of the day, this is more for when you go to the 4 hour, you kind of get an idea of what kind of range you're trading in, because a lot of people, you're not trying to swing, everything. You're kind of just seeing, okay, I have this, I'm going to, see how price reacts to this level. But if I'm finding a buyer here, I feel very comfortable at least taking up to this level. And then once I get to this level, I'll see how price reacts. And then I can decide to close my trade or keep going, So these levels are more for a guideline and to kind of give you a understanding, like these levels will, price will react to these levels, because as you can see, these are daily closures at this level.
Does that make sense, guys? So, you start on the daily chart, right? This is where you're starting, and you go on the line chart and you're looking, for basically that magnetic zone where there are touches, ideally a support and resistance on this line chart. If you guys don't understand how that works, let us know as well. Like, but basically it's where you're going to see like a sharp pullback, right? That's where there was a touch and then it bounced off of it, right? So he's looking for those sharp points. And he's looking for a support and resistance, and then he'll draw his lines. And ideally he's looking for one close to the price and then one above it and one below it. And that's just kind of marking, okay, these are daily closures. These are very significant areas where price is, I mean, think about it. This is a daily chart, guys. So like, it takes a lot of momentum to like react off of a daily zone. You know what I mean? Off a 5-minute zone now, right? But a daily zone, that's a very significant zone. So you draws out these zones and knows, okay, between these zones, price moves. And when it gets to these zones, price reacts, right? So that's why he's looking for that range too between these lines where he can catch a movement between these lines, and that it's a big enough space, pip wise between those lines to catch that movement.